Good evening, this is Doc Severson for the TheoTrade report for Thursday, April 20th. Okay, big bounce in the markets today for a number of reasons. Some perhaps talking about the tax plan. Looks like it's back on the table again. Was that enough for the markets to rally as much as they did? Who knows? It doesn't really matter what drives the market. All we really care about is what the market is doing at the particular time and how we can find edge in it. So now what I thought I'd do tonight is look at the market from a couple of different perspectives here. First of all, I'm going to look at it from the perspective of somebody that's looking at the market from multiple time frames, using fractal relationships between the time frames, and then basically trying to understand at each time frame whether or not the price is in either range contraction, range expansion, what's the potential based on every time frame. Kind of put that together with a cohesive thesis for where I see the potential for the chart to go from here. And then from there, I'm going to finish off the report tonight by flipping to the other side of my brain and talking about the market from just a pure probability and expected move basis. So to some degree, we're going to look at it first from a technical perspective and then from a statistical perspective. So first with the technical, if I look at the S&P from the monthly chart on down, what we see is, just this monster trend featuring this 600-point monster move that we've seen really since, well, I guess this one really started about a year ago, or perhaps February of 2016, where we bounced off of the bottom. 600 points since that point. All right, amazing, right? So with that in mind, though, what I'm also seeing is just because it's an uptrend doesn't mean it's going to go forever. And we're also seeing this is a particularly powerful exhaustion signal that often does show at least an arresting move. And we're starting to get to that point now. We're starting to get to that point with a couple of months in a row where we've actually seen no forward progress. So the chart's actually doing exactly what it's supposed to be doing. We can see the energy kind of building up again. But I will say that the very fastest way to recharge a chart like this is for it to go down, which it doesn't seem to want to do, as we can see here through the weekly chart. The weekly chart is just simply setting up a very standard flag pattern. And you can see more detail in that as we get on to the daily chart on the right-hand side here, where this flag pattern is just a simple little downtrend, although what's very important is, so far, we haven't seen it continue with another lower low. So what we've had instead is we've actually gone into an actual consolidation inside of a consolidation. So we're seeing fractal consolidations here, nested consolidations, if you will. Now, this type of actual trendless price action has the effect of basically winding up the spring and getting tighter and tighter and tighter until we'll see some type of explosion from this pattern. Now, so everybody will say, well, which way is it going to go? Well, I don't know. Obviously, I don't know which way things are going to go in the future. All we can do is look at what is the trend here. Typically, movements will go in the direction of the main trend. In the direction of the main trend, from whence it came. And so on every measure, we're seeing such a strong uptrend, it would be hard not to see this thing revert back to the mean in the direction of the trend. So eventually, I think what we can expect to see is some type of breakout, at least attempt above this upper trend line here. Okay, so that would not surprise me, and today's price action sort of corroborated that we may see an attempt to break out above here. Now, I will temper that by saying that every time we've seen what I consider quote-unquote good news, whether or not it's Fed meeting, whether it's the State of the Union address, whether it's, I forget what happened back here, but a lot of these have created key reversal bars or absolute, just fading the good news, So I'm wondering when the next good news point is going to come and to see whether or not that is going to be faded too. This consolidation here on the weekly chart is just a little bit shallow. It needs to be deeper based on how high and how hard this move has been. Typically, these will be a reflection of the conditions that they come from. Put another way, if you just drop a tennis ball on the floor, all right, so it's going to bounce and, do something like that. All right, now what happens if you throw a tennis ball at the floor. It's going to bounce even higher than, the distance from your arm. Okay, and so we kind of look for the same thing to happen. If this thing explodes to the upside, a lot of times it will drift way back down before it will actually catch a bid, find support, and start to move again. We've seen that many, many times along the way, right? We've seen that many times along the way through this massive rally that we've had. We've seen some pretty deep pullbacks along the way, which serve to recharge and advance and find that sort of reset button for a market. So I somewhat feel like a broken record, but to me, if we do see a breakout attempt from here, the most likely outcome to me is that this will be a failed attempt. It will set up as a weekly lower high, and then we'll see the weekly chart move into a downtrend. And I think that will rattle a lot of people. Now, this is a very normal thing. This almost has to be done. This is a very normal thing for it to happen. It needs to do this. It's like how a forest occasionally will need a forest fire to go through there and basically set up the forest for the next 100 years. This is just what happens. And this is what we need to have happen in this market right now. We need to find a lower bid to shake off all this, these weak hands and all this dead wood up at the top of this market, right? And so it's going to be scary when it happens, but it's oh so necessary. And it will also recharge this monthly chart in a hurry. And this is desperately what it needs right now. But the market can't seem to get any selling together right now. And I think part of that is just because of the geopolitical conditions, or not even geopolitical, it's more of the geoeconomic conditions where we have negative interest rates in the world, where people are going to find a way to get money out of the bank that they're being charged interest to keep it there and to put it into stocks where they're going to get some type of return, whether it's positive or negative, but it's better than being charged interest for letting your money sit in a bank. Okay, so that's a very long-winded way of saying, based on the chart analysis here and the energy and the fractals, everything that I'm seeing is that, yes, short term, I'm seeing a very bullish consolidation. It should try to break higher, but I think ultimately that breakout attempt, that jailbreak from the top of the flag there, should be doomed. Should be doomed. It should fade back down again. Should fade back down again to find a deeper bid. And that ultimately is going to be a very, very good thing, I think, for everybody involved. Okay, so that's one way of looking at markets. Now let's look at another way of looking at markets. Let's look at the statistical way of looking at markets. And what I'm going to do here is I'm going to go back a week ago. So the markets were closed last Friday, a week ago. So I'm just going to look here at this non-trading day, and the spiders were at 232.51. 232.51. And what I'm going to do is I'm going to go down here to the 21 April options and draw over to the right-hand side here, and we can see that the expected move for those options, assuming we were back a week ago, the expected move priced into that option chain was plus minus 3.424 points. So let's think about this for a second. So if the current price at that time that we started the week with was 232.51. All right, so let's do a little bit of linear math here, and let's see how we work out here. So this is going to be our starting point, which is going to be 232.51. All right, so here we go, 232.51. Now it can go to the upside plus 3.424 points, and that's going to be 235.93. 235.93. That's our upper target for Friday the 21st. And then the downside target down here was 229.09. And the way that I got those two numbers was taking this number and then either adding or subtracting this 3.424 number to that. Okay, so let's mark down what we care about is the upper number here, which is 235.93. Let's go look at the chart and see how that's worked out so far with 1 day left to trade in the week and see whether these expected moves have any predictive value. All right, so here's the spiders chart. So I brought up the spiders chart, and here is, again, where we finished off last week, and actually the last day of trading last week was on Thursday, with a price at 235 or 232.51. 232.51, and then from there we had a plus minus 3.4 point move. Obviously the price did not go lower. So let's look at the upper predictive value, and that was through the end of the week. We had a 68.2% chance of the price staying either in this range, either to the downside or to the upside, and the upper end of that target was 235.93, or right there. Okay, so what does that tell you? The price rallied like crazy today, got up to the expected move target for the week, and all of a sudden came to a crashing halt. Wonder why? When the expected move for the entire week was tagged, that's where we saw the fade. So what does that tell us? For tomorrow, probably upper limit for this is going to be somewhere in this area. So perhaps we are going to have a little bit of a movement tomorrow, but we're going to be watching that level of 235.93 very, very carefully in the spiders. Okay, so as you can see, both of these techniques are very, very different. Sometimes we'll use one, sometimes we'll use the other. Sometimes we'll use them both together to be able to perhaps amplify, multiply our edge. So in the end, they're both kind of saying the same thing. We just got there a different way. Hope that helps. Have yourselves a great trading day tomorrow, and we'll see you around this weekend. Take care, folks.